I'd like to welcome everyone to another Chat with Traders community presentation. And today we have Trent Klarenbach. Where are you currently at?
So I'm located in Saskatoon, Saskatchewan, Canada, almost the middle of the country, a grain growing region in Canada. It's probably Canada's breadbasket, if you will, and that's where I'm located. So I grew up in a small community of 500 people, rural community. I was on a grain farm, four siblings, uh, primarily a wheat durum growing a farm at that time. Grew up during the 1980s, early 1990s, went away to university, went to College of Agriculture, got a degree in agricultural economics, which I find amusing because at that time when I graduated in 1994, there was very little economics in agriculture. But I got caught up in being in the College of Agriculture and decided I wanted to farm, came back to the farm, did that for a few years, got out of that in about the mid 2000s, right before the turnaround in grain prices. And then when environmental consulting, grew a business, sold it. And then the last 7, 8 years, I've been focusing on the financial markets and trading. And then I recognized an information gap for farmers in grain marketing and decided to fill that gap. And that's where I am today. I published 2 newsletters. Klarenbach Grain Report with grains and oilseeds, and the Klarenbach Special Crops Report, which is probably one of its kind, maybe in the world, with peas and lentils and canary seed and kabuli chickpeas, etc. So,
What is it about agricultural economics that you found lacking when you were going to school? Hasn't agricultural economics been around for a very long time that it would now enable farmers to sell their product forward? Is that correct?
yeah. So it's my little joke, I guess. So
Hmm.
grew up in the 70s, were a time of inflation and grain prices rose, and of course the great grain robbery was in 1972, I guess it's been coined, when Russia entered the market in a big way, and then the 1980s came and grain prices dropped and interest rates were quite elevated, double digits, 20%, 18% interest rates. And we entered a period of drought in Western Canada in the 1980s, probably North America. And there essentially was no money in growing crops and being a grain farmer. That's why when I say there was no economics there was no profitability. And in fact, in my municipality, which is a local municipality in Saskatchewan here, the Royal Bank of Canada was the largest landowner at one time. They had their name on the most titles, and it was a period of an exodus out of grain farming at that time. And it was just that's why I said there was no economics in it. And that kind of transferred through the 90s. But the mid 90s, things started turning around for a few years, and then we had a series of droughts in the early 2000s. It really didn't start turning around until 2007, maybe 2009, somewhere in there. In agriculture. So I say the economics came back. There was money to be made and lots of it, whereas through the 80s, there was money to be lost and lots of it. Yeah. So interesting, you talk about economics and agriculture, in World War II, the Canadian Wheat Board was formed, and I think the Australian Wheat Board was formed at that time also, and that was primarily to provide grain for the Allies in World War II, and that really inhibited the farmers' ability to sell grain. So when the internet came out in the mid 1990s, I was interested in the marketing of grain. I had plans to, establish myself as an exporter of specialty crops, and I realized that American farmers were so far ahead of Canadian farmers in their grain marketing skills and knowledge of, risk management tools like the futures and options, and because they had to be. In Canada, we had the Canadian Wheat Board, and it was a pooled price, and there's no incentive to learn about, the futures and derivatives. There's no reason to do it. So there's still a hangover today with that, I believe. I call it a hangover. There's a generation that grew up in farmed for years on the Canadian Wheat Board, and in the delivery options, the marketing was basically this: you take your samples to the nearest grain elevator, and maybe go to the next one along the railroad track, or maybe you got crazy, you can cross the tracks to another grain elevator, and that's how you sold your grain. It's changed quite a bit now with, but yeah, it's a fascinating journey, and it's interesting transition for me to watch. So right now, farmers, a lot of them multi-million-dollar operations, extremely wealthy farm individuals, are still scared of using futures and options. And there's a great lot of learning to do, I think, for Canadian grain farmers in particular, and I suspect Australian also.
So tell us, how did you get into looking at the financials of the grain market and how to sell grain contracts, and how did you dive into this?
Well, I've always been interested in the stock market,
Mm-hmm.
but I never had time to really study and learn how to be a proper investor. I was either farming and I had no money, and my environmental consulting company was so busy, I was so caught up working in the business, not on the business, that I just didn't have time or energy to learn. What happened was, though, my son approached me one year at Christmas time and said, I want to quit university and learn how to day trade. So, not everyone's dream, but I supported him 100% on it, because my dreams should not be his dreams. And what do I know, right? I don't, I've been wrong about so many things in my life. I question everything, but I believe it's important to support your children. So I did that. And through that process, he introduced me to technical analysis. And as an economist with an background, agricultural economics background, you can imagine how receptive I was to lines on a chart and what I consider just to be nonsense. And he, but I think we can learn from our kids and different generations. And I went down that rabbit hole, found some great mentors on the internet, and studied under them, and realized, yes, this just filter out all the noise and just focus on what's important, and that is price. And as Brian Shannon from Alpha Trends has coined the term, only price pays, and I believe that's the case. Your grain, for example, your wheat is priced in dollars and cents, not priced in weather reports and rainfall estimates and supply, consumption estimates and demand estimates. It's, so I recognize that. Let's just focus on the price. This is what matters to me. This is what the commodity's priced in, and so I went down that rabbit hole, and 8 years later, and I'm a firm believer in it. I've turned the news off. My life has got much more enjoyable since I don't watch the news. I glance over headlines periodically, but I just found it's a lot simpler, more enjoyable just to focus on price instead of events.
So when did you first open your first brokerage account, and tell us a little bit about your early trades?
Well, it would have been in 2015, I believe. And it's interesting. So you enter into this, and I was old enough and I knew better, but I didn't know what I didn't know. I knew there was no holy grail, but I didn't even know where to start with the trading. So I did find some great mentors, and some of them were like, Brian Shannon of Alpha Trends. I was in his program for a while, and that was a great resource. Stan Weinstein's book, How to Make Money in Up and Down Markets. Great. If you're religious about trading in the financial markets, that might be a Bible in it, But so I probably overestimated my intellectual capabilities, and I started drinking from the fire hose. So if I would have stayed on the trend following concept and established that foundation before I started drinking from the fire hose and learning about, everything from, Elliott wave to, TD and different, just different concepts that you should layer on after you establish the foundation. Get your foundation built, then put up the walls, then put up the rafters and the roof. But I decided to drink everything from the fire hose and try to learn as much as possible, looking for that magical moving average crossover that was going to.
Well, it's exciting, isn't it? I mean, it's exciting when you first dive into it. You want to inhale as much as you can and look at all these different indicators. And I found that time period in the beginning to be quite fascinating, because It's like a treasure hunt.
That's a good way to put it, a treasure hunt. And I think it's the greatest game in the world. I love it. This morning I was looking through scanning some charts in preparation for our conversation today, and I just realized how much I enjoy it. I just get excited, you know, looking at charts, and what I learned too is the KISS principle, as in most places in our life, is it's certainly the KISS principle applies to trading and investing also, is keeping it simple and, you know, following a trend and not getting too fancy with different strategies, you know. It's just, they're all good. The knowledge is, different strategies can be effective, and having knowledge of them important, but really it's just keep it simple.
So what does that mean then for your trading? Like, can you show us what does keeping it simple mean?
Well, for me, the first concepts I learned was trend following and how to identify a trend, and, you know, try to understand where you are in the market structure. And I talk about this quite a bit, the 4 stages of the market structure, you know, and where you want to be long, where you want to sit and wait and observe, and when you want to be out of the market, where you don't want to have a long position. There's a river near my hometown, and, you know, I always thought it's easier to swim with the river than against it. And trying to be a fancy counter trend trader, for example, it can be done on short time frames. I found it to be rather expensive way to trade. So
I see. So were you in the early stages, were you trading with your son? Was your son teaching you a trick or two?
well, he was funny. He would show me. He was very good at journaling, and had a website, and he was showing me his trades, and, you know, I guess he's establishing his brand. And he would show me these trades he did and what he was looking at on a chart. And Ian, I had no idea what I was looking at. It was like looking at drawings on a cave somewhere. Some in Greek. I didn't understand what it was, and so I run into that now with people who read my newsletters a little bit when they're introduced to it. And I spend quite a bit of time explaining what I'm looking at. But yeah, so we did the trading, and we each had our own separate account, and we were managing it that way. And it was funny, though. I did learn, it's probably about 6 months into it, I learned it's not what you enter and when you enter it is important. It's when you're getting out if you're wrong, and how much are you betting. So I would find my bet size, my position size, was too large relative to the account size, and I didn't honor
Define
my
that.
stops.
So
Pardon
define
me.
that when you say your position size was too large compared to your account size. What was that percentage wise?
Well, there was no strategy. So it was, you know, it might be 25%, 50% of the account size.
Oh, wow.
There was no strategy whatsoever. So I overlooked the importance of that. I thought that was one of the first concepts that I learned, but I overlooked the importance of that. I thought it was important, but what you enter and when you enter it. But really, you know, if you know when you're getting out when you're wrong, and you stick with it, where your initial stop goes. But then if you manage your position accordingly, you're not as emotional. You take a lot of the emotion out of the trade, and I work a lot better. I operate a lot better when I am not emotional. I get irrational when I'm emotional, and I don't think I'm the only person that happens to. You know, so I missed the whole. I overlooked the importance of it. I thought it was an intellectual pursuit, and it is to some degree, but it's actually I don't feel it is. I think it's more of a, well, maybe it's an emotional pursuit or emotional understanding of yourself, and maybe that's what it is. It's not an intellectual pursuit that I thought it was.
So when you started trading with technical analysis, did you venture off from trading just commodities into trading everything? Did your background influence you on what to look at, what to trade, or were you into just about whatever moved you'd get into?
No, no. So I was in a hurry to replace income. So what happened was I had a successful environmental consulting company, and then I merged that, became a silent partner. My income obviously had been reduced because my role had changed and my risk has changed. So I wanted to learn as quickly as possible. And I felt the best way to do that was with the stock market. There's trades regularly. There's so many different securities to choose from. And there's a lot of information on the internet regarding stocks. Less so, if you want to learn how to trade, you'll learn better by learning from somebody in the stock market than you will in the commodity market, just because there's just more data, more information, more participants in that field. And then that wasn't enough. So I went hard into cryptocurrencies because they trade 24/7, and you can get a lot more reps in. Maybe I forget the math I did it, but it was just 24 hours a day, 7 days a week versus whatever it is, 9 to 3:30, 5 days a week. In the stock market, you can get a lot more reps in.
Yeah, yeah. So when you said you're a trend follower, how short or long were your trends? How long did you typically hold on to each position?
Yeah, so I did it backwards, Ian. I learned. I hope I've made every mistake possible by now because I'm not looking forward to anymore.
Mhm.
But I was on a short time frame because I thought day trading was exciting, and you could show some quick gains, and my account size wasn't large enough that it was going to take. I wanted. You see these individuals on social media touting these gains. I thought, well, I can do that. If they can do it, I can figure that out. But anyways, so I was on a shorter time frame. But then I didn't do day trading very long because I found out I wasn't successful at it. It required too much attention, and I did not want to sit at a desk for an hour and a half or 3 or 4 hours a day. And then I became focused on swing trading, days to weeks, and that I really enjoy that time frame. I think that's my favorite time frame. But really, what I think a person should do is learn on, if you're going to play with your own money, learn on a longer time frame, like an investor or position size trader. Understand trend following, and then shorten your time frame up. I don't day trade anymore. I'm not interested in it. I have control. I have freedom of time at the moment, and I'm not willing to give that up. So,
Hmm.
yeah.
Well, great. Perhaps you'd like to show us some of the charts that you have and show us what you're looking at to set up a potential trade.
So I'm seeing a lot of opportunities in the stock market right now. A lot of good setups. Can you
Mhm.
see my screen there, Ian?
Yes, yes, we can.
Okay, this is so what I mentioned earlier is I like to look at at commodities or stocks that are breaking out of what I call a stage one accumulation. It's a basing pattern after a large decline, and you can find that set up on all of your time frames. So if you're an investor or position trader, long term, weeks to months, maybe years, you can find these setups. You can also find them if you're a swing trader, days to weeks, and also a day trader too. These chart patterns repeat themselves continuously. So,
Hmm.
and this is an example of a stock that I'm watching closely, and it's Lemonade, LMND. I don't know what they do. I know nothing about the stock, and it's probably might be a meme stock here. I'm not sure what's going to happen, but anyways, you can see right now where we have this base being formed after a large decline. The stock hit 188. Now it's trading at $19.
Yeah, so
And
I see, just looking at the chart here for those who just tune into the podcast by auditory, I see it starting to bottom here in early 2022, January 2022, around $19, and then it appears to go sideways in this tight consolidation pattern for the last, well, how long is that? That's more than 2 years.
More than 2 years, yeah.
Mm.
So, I don't know if this is going to break out higher or if it's going to break out lower, but I'm keeping an eye on it because if you have a long base, as JC Perret says, longer the base, wider the space. So perhaps we get a movement up that replicates something that we saw in 2021.
Mm-hmm.
But yeah, so I look for something like this. I look for a breakout out of a stage one accumulation. So in order to get long. So this stock right now, I'm looking at it is where if it gets out above $23, $23.33 here on my chart, then I'm interested in becoming long on my time frame. I'm looking at the weekly chart right now. So that's an investor to position class time frame. I'm using that as an example, and I would get, I want to be long that commodity.
I see.
However,
Mm-hmm.
sorry.
Oh, I see. So essentially what you're saying is if it breaks above the previous high made in the last, looks like, is it about a year and a half or so, which was around 23, $24, then to you that would be a sign that the bulls are in charge, and you might expect it to run for a while.
Yeah, exactly. It would appear to me that we're entering into a stage two markup, which is it's defined by an uptrend, so higher highs and higher lows. And if we make a higher high, then I have to I develop stronger conviction that trend is going to continue with higher
Mm-hmm.
highs.
So where we're in right now, this is called the accumulation stage. Is that correct?
Yeah, I call it a stage one accumulation. So
Okay.
it's a basing pattern, and if you just for example, I'll throw some moving averages on here, and I have this is a weekly chart. So I have a 30, 40, and 50-week moving average on there. It doesn't really matter what they are, but a short, intermediate, and long-term moving average. And you can see how after the large decline, the moving averages have been crossing over one another as we go through a period of consolidation. And then that's an indication of the buyers and sellers fighting for control of the trend and the indecision of the market of whether this is going to trend higher or lower.
Mm-hmm. Do you look at
makes a new
volume?
high, I don't focus on volume.
You don't? Okay.
No, I think volume can get a little noisy. I know a lot of people look at volume, but I don't. I'm just more concerned about the price. So.
Mm-hmm.
But I know a lot of people do, and I think it's a great tool. I just don't use it. Another one I'm interested in, similar idea is Tilray. It's a pot stock. We can see how, pretty spectacular trading up to $66 all the way down to it's trading at $2.15 now. Is this breakout going to happen in the next week or months? I don't know. It go sideways for a long period of time yet, but this is the type of thing I look at. And if you're a day trader or a swing trader, you just lower your time frame and look for the same sort of setup. So.
I see. So this is stage one. Do you have some charts for stage two when it starts to break out?
I believe so. I'm going to run through a few here and just see what I have here. Wardley Parker looks like it's about to break out out of the stage one accumulation. It's testing what I call a previous high here. And, we'll see if that happens soon or when it happens. But, this is another one I'm keeping my eye on. Can you see this on my screen now?
Yes. Uh-huh.
Okay, so that's what I created of the 4 stages of market structure. So you have your stage one accumulation, stage 2 markup, then following a run in prices, an uptrend, you always get a pullback and a period of indecision again, which is the stage 3 distribution, which looks very similar to the stage 1 accumulation. It's a series of sideways consolidation. And eventually it'll break into a stage 4 decline with a lower low.
Okay. Can we zero in on a stock that is currently in a distribution phase or was, and then we can see what it looks like? What are the characteristics?
Ford Motor Company. So I'm looking at the weekly chart here. And obviously we saw this big run up of stage 2 markup, the pullback, and this is a weekly chart. So I would say that this looks to me like it's in a stage 3 distribution. We had the pullback, the price is consolidating sideways. And if we get into a new low in my chart less than 1116, then I say we enter into a stage 4 decline. The challenge with stage analysis is you don't really know what stage you're in until an uptrend or downtrend is established. So if we get above 1615, then I think it's a continuation of the stage 2 markup. We enter into another stage 2 markup. Below 1116, then I think we're into a stage 4 and we're decline and we're going to lower prices.
So in this stage 3, the distribution stage, that's what it appears to be right now. Are these the times when you like to just stay out of the stock?
It's what I call a no trade zone.
Mm-hmm.
I don't see, if I'm an investor looking at the weekly chart of Ford Motor Company, I don't see an edge. I don't see an edge. This thing could continue sideways for months or years, right? We just don't know where. I just don't have an edge. So I don't see an advantage to trading. Now, if we get above this level, then my conviction that the uptrend continues is greater. So I'm more interested in being long. Below here, then I'm not going to, if you want to short forward, this would be maybe a good opportunity to do that. So yeah, quite often the market, as you know, it's in a no trade zone. There's no edge to be found on your time frame, and you're better off just sitting and waiting and waiting for an opportunity, wait for confirmation of a trend change.
How often do you get eager to say, look at the daily chart and say, oh, look at the daily chart's triggered a buy here. Maybe I should jump ahead and not wait so long for the weekly to confirm it?
Yeah, it's the reason I gave these examples with the weekly chart is there's less noise in the chart, and the trends are a little bit more easier to identify. But yeah, what you really want to do is you really want to see alignment across multiple time frames. So you really want to see, a breakout on the weekly chart coinciding with a breakout on the daily chart, and then your likelihood of a profitable trader are a lot greater. If I was looking at Ford Motor Company, the daily chart right now, I don't know if this looks like maybe a left shoulder, a head, or right shoulder, perhaps here. And, so I'd be looking at this, I don't see an opportunity to go long here, but if I owned Ford, I would be looking to exit my position below $12 with a new low. That's the type of things I look at. But as far as an entry, I don't see an opportunity to enter at the moment on Ford. It's kind of sitting and waiting. Mm-hmm. Fortunately, there's 4,000 other opportunities to invest in.
Given your background in agricultural commodities, wheat and others, I imagine, are there any commodities that you can show us that illustrate kind of what are you looking at, what looks good from a long and short perspective?
We'll look at this is Kansas City wheat. It's the next month out. My nearby charts pretty busy. So this is the next month out, and you can see here where, and I wrote about this in one of my newsletters, the Klarenbach report back on probably September 9th of 2020. We're about to enter into the golden age of agriculture. I suggested that, and it did turn out to be that way by any measurement. And basically, I saw we were breaking out of a stage 1 accumulation, this period of consolidation, and we definitely saw that. I've actually been bearish grains and grain like wheat since January of 2022. So back in here, spring of 22, anyways. We started making new lows and suggested that the trend had changed. So, but I'm looking at Kansas City wheat here right now. Go back to the daily chart, and you can see here how this is the stage 1 accumulation. we broke out above that. And once we made the new high, you can see the buyers really stepped in on 22nd of April, and it's just pushed the price higher. So, this is a sign that potentially a trend change is happening in the wheat market, and all trend changes start on the lower time frame. So, for it to change on the weekly or the monthly, has to change on the daily first, and we're seeing that already.
So question, I noticed on the chart that it spiked and hit a high or a recent high right around the time that Russia invaded Ukraine. And with all the news, I know you don't like to follow the news, but the news was screaming about how we're going to have a shortage. Ukraine's wheat growing capabilities have taken offline and Russia's sanctioned, but yet the price continues to fall. What do you attribute that to? I mean, when the media reports shortages, are they looking at different kinds of data? What are they looking at that leads them to that conclusion? And yet the market obviously is oversupplied because prices fall. How can you describe the discrepancy?
Again, I don't put any faith in the news,
Mm-hmm.
but I do know this. The news reporters are getting the information from a variety of sources. The best sources have positions in the game. And you'll see this on the financial news networks on television. You'll see it in all media. People will talk their book. I think that is part of it. I don't think that's all of it. The people talk their book. I think there's sensationalism that happens. I think bad news sells. I was told recently, Trent, you would sell more newsletters if you weren't bearish and told people what they wanted to hear, not what they. So as a, I don't trust the news, if that makes any sense. I'm not a conspiracy theorist in that regard. I find it unreliable information for following the price. So just for example, one of my specialties is in the cash grains in North America and Canada. So I was bearish durum January. I had sell signals trigger in January of 2022 in the durum wheat market. Very thinly traded relative to Chicago or Kansas City, but nonetheless an important market in the world. And I was one of the few people who were saying sell your durum. Durum had gone up to $22 or $24 or something, and it was pulled back to under 20. And my sell signal got triggered at 1960, and I was told I was wrong, and there's all these things that were going to happen and did happen. But I mean, durum went to $10. It's under 11 again, right? So I mean, I didn't focus on the news. I didn't, because I have my own biases. So if I'm long a position, if I look for news, I will find news that supports that position. If I'm short, I'll find news that supports that position also. And just human nature. And I'm an old farmer. My buddies are all farmers, and so on that side of things, they always look for reasons to be bullish why the price is going higher, and they discount the reasons why it's going lower. And in my world, the best metric for the direction of the price is found on the price chart. Is it going higher? Is it going lower? I might want it to go higher because I'm long Kansas City wheat, but the market doesn't care what I think.
When you're talking with your farmer friends and they're looking to sell their crop, when the prices say down, say early 2024, when the price is right around 5.5 thereabouts, and it looks to you, if you see in the charts that a turnaround appears to be building, do you tell them, hey, no, don't sell your grain if at all possible, hold as much as you can in storage because it looks like things are starting to improve? And then later on, do you tell them, well, okay, when we get up to the markup phase, now is a better time to sell if you need to sell?
Yeah, so farmers will sell grain for two reasons. One is for cash flow for their operations, the other one's for bin space. So right now we're in seeding in North America and Canada, and farmers are already talking to me about selling their inventory to free up bin space. So right now the market is rising in canola and in the red wheat and canola and CPS red, which is essentially Kansas City. So it's tough to sell. So I'm encouraging guys not to sell, hold off as long as you can before you make a sale at this particular moment, because the short-term trend is going higher. We want to ride that trend as long as we can. I also suggest to them though, if you must sell and you want to sell, and if you can sleep better at night by selling, then I think you should sell. If you sleep better, if it's keeping you up, sell. That's the best advice I can give. But also, if you want to sell or need to sell, offset it with some using the futures market. Maybe calls, or I don't like talking calls a whole lot, but for options a whole lot. But I mean, take out a position on paper so you can enjoy that upside. Cash in, get cash for the physical, and still enjoy the advancement in the price on paper. So.
I see. And then of the farmers that get into using futures and options to hedge the risk and lock in prices, once they go down this path, do you find that they are like totally hooked and they don't go back to the old ways that they used to do things?
A lot of farmers and people are really fascinated by the financial markets, and I had a recent discussion with a large broker in Canada, dealing with farm clients also, and they can overtrade, and just like which I can do, and a lot of traders can. You can overtrade, and because it's exciting, right? You get instant risk, instant reward or instant loss. It's an exciting thing. So once they tip their toes in it, that's the first step in getting them to use it more often. It's a tremendous risk management tool that very few, in my experience, understand, and even less capitalize on it. So it's a slow process. But
how often do you run into a situation where you find farmers who, say, even through your advice, or they get into following the charts and stuff, are so convinced of a turnaround that they'll rent out storage space for their grain from other farmers who prematurely sold too early and have extra space, and just stockpile to the amount that the cash flow can support this, and just stockpile it and patiently wait until you get another blow off top like we saw in early 2022?
In my area in West Central Saskatchewan, canary seed. It's a bird food, low acreage, but my neighbor introduced it to Canada and established a large special crops exporting business around it, and really kicked off the special crops industry in Canada. So that was 40 years ago, maybe 50. But what happened then, farmers would grow canary seed, for an example, and they would bin it. It stored well, and they would bin it for years, and they'd wait for that opportunity to sell it at 40 cents a pound, which would be 2 or 3x what it normally would trade at. And there was some wealth created doing that. There's at least one example where that didn't work out so well, but it's like everything else, you need to be able to wait. And some of these individuals who did that were able to wait. I did hear a story recently about some farmers with canola on hand, and they were in the process of building 1,000 bushel bins. Sorry, 100,000 bushel bins maybe, or I don't know. It's large, 50,000 bushel bins, large bins anyways, to store this. It was going to be a large investment, and it was a huge, store this canola, because they felt the price was too low. And it takes me back to my first marketing class I took outside of university, and the instructor did not understand why farmers stored their grain. Why wouldn't they sell it, get 100% of the cash, and use 5%, 10% of that cash to own the product on paper with no risk of storage, no risk of spoilage, no risk of theft? Plowing snow as we do in Canada in the wintertime to access your bins for delivery. And so I question that logic of storing physical, but I do see it. And it happens. Every farmer that I know stores grain year to year. They don't liquidate their entire position unless they have to, you know. I struggle with the concept of not getting paid. So,
Well, what is your take on the grain ETFs? Like, for example, wheat, WEAT, or soybeans, SOYB. Are there what are the things to look out for when trading these type of ETFs?
well, that run up in wheat we saw
Mhm.
in the fall, this chart here shows it quite well. It started in September of 2020 and just took off. This is following the GameStop and the Wall Street bets and the whole Reddit thing, and I became aware of it. I didn't get into that. There's, again, too much noise for me, but I was using a platform that tracked mentions of different stocks and ETFs. So I looked at wheat, WEAT ETF, and I noticed it was getting mentioned on Reddit with greater regularity. And what those ETFs do is they allow the retail trader to participate in the trading of wheat and, you know, soybeans and corn, series of ETFs there. And I do believe that run up in wheat and grains from fall of 2020 all the way up to 2022 was driven more by speculation than supply and demand constraints. And I do believe that the ETFs played a part of that in providing access to the retail traders. But
I see.
I wrote about it a couple of years ago, and you can find it in my grain report. I drew attention to it, but I have no way of proving that, but
I see. Isn't it normally the futures market sets the prices and then the ETF just kind of follows along for the ride? But it sounds like you're saying that there was so much demand in the ETFs that the ETFs became a major buyer of grain futures that pushed the prices up.
I can't prove that. It's pure
Oh, okay.
speculation.
Okay.
But I mean, this is the wheat ETF right here, right? So
Mhm.
from my understanding, how this works, if I buy units in this ETF, then it needs to be replaced in the futures market, right? So it can drive. It's speculation on my part, but and you might have somebody on that can discount what I'm saying. I just know that the more people who have access to your asset class, the more likely they're going to impact the price.
I see. I see a double bottom here, or looks to be a double bottom, early 2024 to mid 2020. Do you look at that? Double bottoms, double tops, what have you? Does that factor into your going long?
I mean, they're a level of interest because there was a bottom there, and
Mhm.
obviously there's a supply of buyers at this point at this level. But really, like a double top, for example, and you really need to break the neckline before it to be a double bottom, right? So
Mhm.
it's got a long ways to go before we can confirm it's double bottom by the technical analysis standards. But this is commonly referred to as double bottom. I'm aware of it, but I mean, there is a supply of buyers here, right? So it could be a strategy as it gets down to 486 or $5 is to buy it. You know,
Mhm.
that's not my strategy, but I can see other people doing it.
So Trent, is there anything else you'd like to share with us?
Well, I think it's important to know your time frame. Are you a day trader? Are you a swing trader? Are you an investor? I showed examples of charts with the weekly time frame, so they'd be more for a weekly to monthly time frame investor. If you're a day trader, you would lower your time frame, so looking at the day and the 30-minute, 10-minute chart. Like all these patterns are replicated across all these time frames, but it's important to know what your time frame is. Maybe to establish what I'm trying to say better is, I had a recent conversation with the largest farmland owner in Canada, and he asked me this is a couple months ago, and I was bearish wheat at that time, and he asked me why I was bearish, and he had a lot of reasons to be bullish. And I said, well, we're on different time frames. You know, you're an investor of farmland, a long-term investor of farmland in years, whereas my clients are farmers and they want to sell their grain in the next 11 months. So that's why we're on different time frames, so we have different approaches to the marketplace. And he says, yeah, that makes sense. Yeah, you can talk about that with, using him, referencing him in the future. So that was interesting. So knowing your time frame, try to take your emotions out of it, develop some emotional granularity, know what you are feeling and why you are feeling that way. And I believe that will give you some insight into whether you should sell or hold your position. Yeah, I'm active on social media, on Twitter, my website, klarenbach.ca, Instagram, Facebook. Yeah, I also, Ian, we're offering a giveaway here for Chat with Trader listeners. Do you want to talk? Should we talk about that now, or do you want to talk about that later? So yeah, the best place to find me is at klarenbach.ca.
Okay. And
what we're doing for the trader or the listeners of Chat with Traders is we'll give away to the winner an annual subscription to the Klarenbach Grain Report and Special Crops Report. And to enter the contest, just head over to klarenbach.ca/chat with traders. klarenbach.ca/chat with traders.
Fantastic, Trent. Thank you for coming on Chat with Traders Community.
Yeah, well, thanks, Ian. I appreciate the opportunity to come speak with you, and I really enjoyed it. So
great, fantastic. Thanks.
Thank you.